Hello everyone, how are you? So for the past months I have been posting the trades I took on Twitter, and a lot of people have asked me to make a video about the trades I took, about the top-down analysis and the strategies I use to take those trades. So moving forward, I will be posting videos every weekend about the trades I took and a top-down analysis about how I developed those biases and how I identify raw liquidities. So this week I have took two trades. One trade on S&P 500, a short position on Monday, and the next trade is on Thursday. It's an EQ trade, a short position trade. I have two strategies I use to take these trades and to identify high time frame raw liquidity. So the first strategy I use is quarterly theory. Inside quarterly theory I use sequential asymmetries. The second one is high time frame candle closure. So I mix these two theories to develop my strategy. In the future I will make a quarterly theory, a sequential asymmetry video, and also a higher time frame candle closure videos, and how we can determine high time frame bias and draw liquidities based on these two strategies. For now I will be explaining the trades I took, so let's get into it. The first trade I took this week is ES 500 short position. So for this trade we're gonna start our top down analysis from the 4-hour time frame. Here, as you can see, price is trading inside of a 4-hour fair value gap, so we can expect price to trade from internal range liquidities, which are fair value gaps, to external range liquidities, which are swing lows below here, as I marked them, London's low and previous day low. On the top of that there is a bearish candle to closure, which we will be confirming on the 15-minute time frame later. So our analysis in here, the 4-hour chart, is that price have filled a bearish 4-hour fair value gap and also formed a bearish candle to closure, and our expectation is if we have a lower time frame confirmation, which is a change set of delivery and also a sequential asymmetry, our draw liquidity will be London's low and previous day low. Next we will go to the 1-hour time frame. Here we have a bearish weekly sequential asymmetry where NEQ and ES failed to take previous day high and YM took previous day high, which is Friday's high. So the weekly sequential asymmetry will be our first stage sequential asymmetry. As you can see, we also have a bearish 1-hour candle to closure, which we will be confirming it with 5-minute change of delivery later on. So next we will go to the 15-minute time frame. The reason we are here on the 15-minute time frame is because to confirm 4-hour bearish candle to closure. Here, as you can see, we have a 15-minute swing point at 10 o'clock. Price opened, took the previous candle's high and rejected to close above the previous candle's high. So we have a new swing high and we have to confirm it with bearish 15-minute change set of delivery. So as you can see, we have closed below the two bullish up close candles which formed the swing high. So this confirms this high is protected and price have no intention to take this high. After confirming this swing high, our bias is now bearish and our draw liquidity is London's low and previous day's low. We also had the second stage bearish sequential asymmetry, which is the 90-minute sequential asymmetry. As you can see, at 9:30 S&P took the New York session's Q2, but Nasdaq have failed to take New York's Q2, which formed the second staged bearish sequential asymmetry. So to start our analysis, we have a 4-hour bearish candle to closure confirmed with 15-minute change set of delivery, and also a 1-hour bearish candle to closure confirmed with 5-minute change set of delivery. On the top of that there is a bearish weekly sequential asymmetry and also a 90-minute sequential asymmetry. So my entry for this trade was the 5-minute change set of delivery and put my stop loss at the protected swing high. One thing I recommend you on your trades is to put your stop loss always at a protected swing points. In this case we have confirmed a protected swing high, so putting my stop loss on the protected swing high is a very wise thing to do, and my target was London's low as we anticipated at the beginning. So as you can see, our analysis was correct and price have delivered to our drawn liquidities. The next trade I took was on Thursday. It was a NQ short position. So to start this trade's analysis, first we have to go to the daily time frame. Here on the daily time frame, as you can see, Wednesday took the previous day high and rejected to close above Tuesday's high, and also formed a 1 hour swing high, confirmed with a change in state of delivery, which shows us price is rejecting to go up and showing a signature to go lower. Our draw liquidity will be Tuesday's low. Here on the 1 hour time frame, as you can see, price have opened, formed a high and confirmed the high with a 1 hour change state of delivery and started to go lower to our draw liquidity. So after confirming our high of the day, we will start to look for a sequential SMT to confirm our bias. Here on the 15-minute time frame, we have a clear bearish daily sequential SMT where Nasdaq have failed to take London's high and YM took London's high. As you can see, at 9:13, YM took London's high and Nasdaq failed to take London's high, which formed a bearish daily sequential SMT. After that, as you can see, price confirmed our new swing high with a 15-minute change in state of delivery. We also had a bearish candle to reversal signature inside of a 1 hour fair value gap, confirmed with a 5-minute change in state of delivery. As you can see, the 5-minute swing high have been confirmed with a 5-minute change in state of delivery. My entry was at the 5-minute CISD and my stop loss was, as always, at a protected swing high. And since our draw liquidity have been already taken, I placed my take profit at a fixed to R risk to reward ratio. So these are the two trades I took this week. It was a good week and the price action was really clear. If you have any questions, feel free to ask me on Twitter or here on the comments, and I will try to answer all of them. I wish you a great trading week. Have a great one. See you next week.